Here's the RRG right there of daily time frame. So we have Nvidia sitting here, Tesla up here, Meta. This is the Mag 7, XLK, ETF, Microsoft, Netflix, Amazon. This is the one we did a trade on Google, which played out pretty good. Um, I was after this rotation. It's like, okay, look at all the other ones and look at these two. So this is the one we're getting punished right now. But we got plenty of time, so you just gotta be a little patient, so we'll see. It's a big company, not a something but it definitely yesterday it pointed back down again because of the Trump tweet. So eventually it's gonna make his way out. But Google, we caught this entire move on the trade. So we set up a target on that one at 175.50, and I think the high was 176.77 um, since we closed the trade. So it had a it had a higher monthly bar. So when I saw that one, and plus I'm looking at this, and I was like, Google is. I like this one, plus I own shares as well. So I think it has to make its way up. Um, so this one is good. Fighting this one for now. So we'll see what happens. Now, if we go back here to the weekly time frame, look at all these stocks where they're sitting. If we took a pause here in a third quarter, I don't know. I mean, cannot perfectly time everything, but if we happen to take a pause in a third quarter, fourth quarter looking pretty good. But again, this thing crawls like really slow because in a weekly time frame. It takes a long time, but to buy like a long dated leaps, I mean, it will definitely reward you something. That's what the approach is. Like most of like what you're looking at here is like every portfolio manager in the world who manage money, funds and whatever is looking at this, what you're seeing right here in real time. So that's how they make their positions, adjustments, like where they can, downsize risk on which one they can add more, because that's what you trying to find two things. The most important two things is what? Momentum and alpha. That's what the RRG is going to give you. This explosive move that happened on Google. And why is that? Like what happened to the price is fine because it's pretty far away from the benchmark. Further and further away the security is away from the benchmark, wider the rotation is gonna take place. This is where you have your alpha. You want alpha. You want some deadbeat is like going like this. There's a lot of them. There's a lot of these. There are a lot of stocks. They go here, and then they go like this. Those those trades just has no alpha. They can move. They're not gonna move much. Going back to the upside, the trades there will move like this. That's why we just saw Google had a 7, 8 point move. Google went up quite a bit this week. The overall, if you look at a standard deviation move, was pretty. was big because it had because why? Because it was showing the momentum and alpha. So every time when we're looking at the RRG, I'm not trying to chase something here because the entire move most, was pretty much done. We're looking at something that is starting to come out of lagging, go toward the improving and see if we can fit this with the technicals to make the trade. And I've nailed, I don't know, hundreds and hundreds of trades and you guys all know that. We've done a lot of trades of an RRG that plays out over time, but it takes time, that's why I try to, not to fight something on a smaller time frame. Some position takes time. Some will instantly move right away, and some they just crawls for a few days, and then as long as momentum and alpha looks good, there is a pretty good chance that the move will happen one way or another because where you think is not, well, we all know that this stock is just not going to stay down in lagging quadrant for the rest of the year. They're going to make his way out. So like if you go back here in a weekly time frame, so all the stock that took the beating, right, that just got pushed down. So if we go back here to the date will change right there. Uh, If we go back here to start the year, okay, there. This is where we started the year. That will change on a weekly basis. There comes the second week. Oops, I want to make this thing. I gotta grab this slider and then slide it. Here it goes week by week. 13th, that was January. There comes February. Okay, Tesla. And this one was due for it's a crazy stock. Look where the rest of the stock is, where Tesla is. Tesla just took that 53% plunge. Okay. All these stocks right there, Amazon, Mag, Netflix, you see, they're all starting to pointing down. Apple, Nvidia, and now you see every stock pretty much. Netflix trying to be cute right there. See, it's trying to form a hook back in March 15th. Turn around. Well, look, all the rest of the stocks are going. Each week. Here comes, that's the 425. The day right, look right there, 425. It's going to change each week. See, this is how much they move in one week. Very small because the time horizon is too long, 5-2, 5-9, 5-16, 5-23. That's where we are. They're making their way out. They're not going this way. That's what I'm saying is buy the dip. Dip is always going to torture everyone for some time, but it'll pay. This rotation right there with all the selling that took place that we just noted, that we just saw. Now they're just going to try to make his way out. So now the question is that which trades are going to have the most alpha and is going to have the momentum? Number one, that's two. This is ETF. You don't ETFs don't make explosive moves like stocks, you know? Apple right there is kind of going back this way, but it's not really. We're gonna have to wait for this. It's gonna take some time. That's what I think of the Apple's is gonna. I don't know. I'm gonna have to think and see what we can do. Maybe we're just gonna lose time. I don't think I'm wrong on the direction of the stock, but it's just the damn time. I got 2 months when I got in, but we have plenty of time, so we'll see. No need to panic. Um, is it Google is a buy. Amazon is a buy. That's the Mag 7 ETF. See, Meta right there is too close. Meta is just not gonna have, unless if it goes from here like this, that's a different thing. But if Meta can move, but look at Netflix. Netflix is the only stock, if we just noticed, that didn't really follow the rest of the stocks. It came down because there it realized right here, you see, which was March 28th. Like, okay, see ya. You go back over there. I'm gonna go right back up because it realized like why there they have nothing to do with tariffs. See, trying to fall because the market was under pressure, but no. And this one, I don't know. I mean, to me, it's just because the overall picture right there just looked too damn like range bound. It just what do we can like 1.34%, 6 months of gone. I mean, the utilities and industrial 6.8, consumer 3.8, financial 3.5, communication 3.5, material 1.85, real estate flat. They're not, I mean, how can you survive and sell stuff 7% interest with more the 30-year mortgage? Who's buying homes? I mean, I don't know. I mean, I'm sure there's families out there they need houses, and it's crazy to even think about like sign on a dotted line to borrow money for 30 years for a 7% interest rate, and you have a family to feed. You have other bills, car payments, and this and that. I mean, you're gonna pull some serious cash every month in order to afford the mortgage and, utility bills and car payments and insurance and put food on the table and, you know, think about vacation and depressing, man. It's tough. It's really, really tough. Technology 2.46, energy 4.28, healthcare 5, consumer discretionary 6. That's where we have all these stocks. They're the one who are first was all about inflation and stuff, and now it's all about tariffs. So all the retail stores are sitting here. This one. It's like which three sectors moves the market? This, this, and this. So all the top leaders, meaning the biggest market cap companies, are in these three sectors. Your Amazon and Apple in consumer discretionary. Tesla is down 15.97. Amazon is 8.2, 8.39. So there's no other stock we have really have to look at them unless you want to look at Costco and Booking.com and this and that. But they don't have enough weight as much as these do. Nvidia flat. Nvidia was took a 19.29% hit in the first quarter. Now it's sitting flat. I mean, this is the year high, all-time high. That's the year low. So here's your, sorry, 4 months starting from here. Here's one. So we have a higher month. I mean, a month is almost coming to an end. So yeah, if we look at the seasonality for May, and everybody, they have a thing, they sell in May and go away. It's technically always opposite. Like if you don't even pay attention to that, to be honest. If you look at a seasonality right there since 1975 from 2000 until last year, I'm sorry, this year, 2025, it calculates until last year. Um, May is never down. September is a rough month, but at the same time, they always says that if January, like, and this is what we are in so far. Come on, here. They always says like if January goes positive, so does the rest of the year. But it's I don't know. I mean, I don't want to sound like I'm like bearish or something. I'm taking a little bit of a neutral approach. Just I analyze a lot of price and I look at a lot of sectors. I do a lot of digging. I mean, looking at the swings and this and that. I mean, I'm looking up. I'm definitely gonna some point we'll make a new high, we'll make more room to the upside. It's like the same thing here we did. Like this was a year high right there, and then this high got taken out, and then we made up plenty of room to the upside. But taking his tariffs and there's no actual deals on a table, instead of just literally just buying time. And at the same time that everybody's literally confused, like, I mean, there will be a deal. We all know that, right? Because China needs us and as much as we want them. So they can go after each other. That's a different thing. But at the same point, they're just not gonna hurt their own people there. And the same thing that we don't want to get hurt here either. So they'll make a deal one way or another. Just gotta has to see like who's gonna step up where and what they're gonna pay. It's all about, you know, making a compromise somewhere. But it's not actually officially there on a paper. It's just so they're working on it, I'm pretty sure. Yesterday I read like I think next week they're gonna have a final deal with India. Well, they're gonna be the tough ones to negotiate anyways. So we'll see. Then we can always look up for sure, but like instead of looking anything here, there's no really point to project anything that far out until you really actually break take out the previous high. That could definitely project something to the upside. There's no point for me to look up that far out I mean, fucking what, 3-4%, 3-4 standard deviation move. I mean, come on. I mean, it's just if you just simply take your fibs from here to here, we send right there. 8.6% retracement. So 61.8, 50%, 38.2, and 23.6. So from just a simple fib that you can draw, or right here. So our resistance is where actually here to this month high. You can do that way as well. You can find support here, this month low. That's all. That's how you draw your levels if you want to learn this high. So now you have this zone. Because any high of the previous month or a quarterly bar or yearly bar, it's gonna, if you're gonna make room to the upside, if the price doesn't manage to back off, it's gonna act as support. That doesn't mean it's gonna hit to the penny and it can stop anywhere, but this is, you're looking for a floor. Like, okay, where would be my expected or potential support that I'd be looking for if the price doesn't manage to retrace lower? So it's right here. They have a, you can consider this as a resistance. That's your resistance. This is your resistance. So if you want to build up two of these support, there you go. That's your zone. That's your first zone. You can just, there you go. So you want to draw, like, people talk about levels and they all those, my this level, my that level. I mean, it's just mark the high and lows on a higher bar. It's gonna give you the same number. It's not rocket science. Look where the price sitting right now between 58.37 and 57.73. The question now is, can it really come back down to really test that 57.73? It can. It's what, 20, 28, 29 points. So this, you can find support here as well in a bigger time frame. But then it's just a matter of like, this is the monthly, are we gonna really gonna shrink how much we're gonna, because the new month is gonna start next month. So we just gotta, we're backing off because the next week is gonna be a short week. So more and more we back off from the highs is never, I mean, and then we have to make a push right back to the upside for the next month to put up another higher bar. Remember, we need a higher bar. What market did here was so sneaky. If you look at this way, S&P could be in a big trouble. If you look at this, you see it has two lower bars. It saved this month. It managed to put up a higher bar. It would have put one more down here. It'll be three. This monthly swing will be turned down. It wouldn't be stayed up. But you need three to the downside. You really need to hold this low next month. Whatever the market has to do, whatever, we need to hold this low. But it just, once you have a lower bar, then I mean, there goes your month. But now if you look at here, which we looked at it before on um they were down 3 months, you know? Same thing here. Doesn't happen that often because it's a monthly time frame. But if you happen to track 3 down months, an S&P 500 is gonna make a nasty reversal to the upside. Just remember that for your future. Yeah, S&P, which tracked the 500 companies, our main benchmark, is not gonna. It's 3 months. Is one full quarter. It's very hard to make a case for fourth month to be down. Very hard. This one was 6.99% compared to this one was 9.29%. Let's talk about reversal here. Look at this one. Remember 3 months. When you study data and you there, there's a lot of time you can make a very good call on like what has happened before and what is happening right now and what we can do what we can expect next month. It's right there because you have to look. I mean, okay, we're down 3 months. Okay, what's the worst gonna happen? We're down another 4 months, like another month down. That if we're gonna go down, if the market is under pressure, completely oversold, well, it's gonna bounce. It's gonna bounce really bad, like nasty bounce. Three is um. What else we gotta do here? Apple bond rates are lower than the U.S. government bonds. Shop in Alibaba. Okay, let's look at quarter. These are the quarterly. We have this is the yearly, same thing. Consumer discretionary C, 2 down months. Gotta remove all this. Yeah, you wanna save these monthly time frames because if the next see this month, this quarter, this is a quarter. Keep that thing in mind. It's 3 months. So for 2 months in a row, consumer discretionary is down, right, with a lower bar. Next quarter, not a month, quarter, another lower bar is going to turn the swing down. So we still have one more month to go. That includes your Tesla and Amazon. So by next month in June, whenever the close, because we have a low here and we have a high here so far, not just a matter of like where this thing's going to close. So the next quarter to save this thing the way, um, we don't need 3 bars down. So we gotta have to break this to print up a higher monthly bar for the quarter. So the only two stocks is gonna do that will be either Tesla and Amazon. Okay. So keep that thing in mind because the swing is up because the two down, you want three. Healthcare is down. See? So it needs three more quarters of a higher high for the swing to turn back up. And when the swing turns down, it it actually never just goes right back up. Keep that thing in mind as well. No swing instantly will just turn direction. So it's just lower bar here in 2024. 25 was sorry, this is that this year. God, this was a last quarter of a last year. This was started from October until December. The first quarter, and now this is the second quarter. And we're right here from this low. So the swing already turned down because healthcare is a tough one to fight. And I talked about this thing a couple days ago as well. Because I'm just looking at this, you know, tough to fight healthcare. Yeah, you can definitely consider buying weakness, but it's gonna you're gonna sit on it for for some time because this thing is not turning back up anytime soon. This is based on a quarterly basis. Keep that thing in mind. Looking at very like one full month. You look at the utilities is up, made of outside bar. Real estate is down. That's why it's flat right there. It's the good thing that it made a pretty nice, huge pin bar, you know? So you have a very good chance that you can make a case of a one quarter for a real estate to be up after that because this kind of a low right there that you see, it's just like you see right there how huge that pin is compared to the body. Look at the next quarter. This is something that can consider to play one. It doesn't mean that we're gonna. I mean, anything can happen, but with the higher rates, I mean, this is definitely due for a one positive month. I'll just make the case like that. So you can just take. You see, that's your resistance right there of a trend line. This high to this high to this high. Price is right here so far. So we still got another month to go. So I don't know where that thing is going to close. And then for the next quarter right there for the real estate, we should have expect at least like a one higher bar. So yeah, ETFs don't take like quarters of beating. It's going to have a positive quarter. Um, Consumer down. That's what I'm saying. It's just, I'm calculating time because we're halfway through the month, sorry, year. Just the time just not adding up for me to make the case thinking like we're gonna have a double digit rally. It's tough because I'm looking at a bunch of things. The time it will improve, but we're just not gonna have enough time. But anything can happen. Down 10%, like so the 20% S&P and up 20%. That's just just we're just sitting flat, not making any progress. You're punishing one side, and now everybody wants to chase the low because we need to retest them. That's always going to be there. One of the term that everybody love to use. We need to retest, retest, retest. Just just a neutral tech is fine. So it consider as one, consider as two, and yeah, I mean, if we're gonna retest the low next quarter or the last quarter, 3 and 4, yeah, I mean, gonna have a nasty 2020 next year then. So this is good. That's when we need this thing to be up. Industrial is fine. Industrial is almost making all-time high. Actually, did it? Did not. What's the high? What's the high here? 144.51. 144.46. I mean, we're talking a few pennies. That's a nasty reversal bar. But same thing means lower bar, outside bar. So these are the big top, like, here you have a Caterpillar, John Deere, and all the other companies, all industrial. But if you go back and look at the previous bars, quarterly bars here, ends up going higher, ends up going higher. So you can make a pretty good case about industrial. That's why I like industrial. I think industrial has, with all his manufacturing, what he's after, building stuff and this and that. Industrial is the one's gonna take the most. It's gonna take advantage over everything. Financials. So the financials had a higher bar here for the first quarter, and now in the second quarter right there. So still that was lower, but turning into some sort of a doji. Energy down. Yeah, once you have a swing down, yeah, just it's. I know Scotty was asking me about it yesterday about a certain start. It's like I'm watching energy, but cannot make a really strong case on energy until for on when you have a downswing like this. That's a huge size. Look at that compared to the other ones. Communication, some sort of a funny looking doji here, and then the material down as well. So what does that show you? So how many swings were based on a quarterly basis? It doesn't mean that swing will not go back up. Of course it will. But how many are down? So we have 1 out of 11, 2, 3, 4, 5. So out of 11, we have 5 swings that are down based on a quarterly basis. So do we consider to buy the weakness on those names because they're already down and eventually that swing will turn back up? Yes, that's the bargain right there. But this market right now, it literally splits in half. A bull case is for 11 sectors to perform along with the S&P 500, correct? But right now we have half and half. So the swings which are down, you're just gonna bleed to death on those ones holding those stocks. The ones that are up are the ones that are gonna give you the benefit because they're the ones that are printing higher bars. That's what I'm saying. It's just a range bound market, and it might most likely will go sideways. It's just it's it makes it very tough for me to make a case after monster 2 years back to back to make another double digit um, um, return here. It can happen, of course, but I don't know. To me, I just don't see it. If we do go back up in here and we're gonna hit this wall right there, it's good. There's some crazy stops gonna get triggered right there. I can tell you that. I mean, if you simply count a line chart, which is always based on a closing basis, right? You can easily make a case. I mean, doesn't can't merely count four here. Doesn't matter. You can put a WXY here. You can clearly count this as a one, two, three, four, five. On a line chart, you can easily make a case here for five completed waves. This pullback, unless it turns into a disaster around here, is where I see the summer is going to get unfold. And we're just waiting for this weekly MAG 7 rotation that we just looked at them. It's just trying to improve from there. That will help the tech and the overall, those stocks. They're the ones going to boost the market. Market is not going to get boost without tech. We all know that. People who sit in and fighting S&P 500 itself, you need to focus more on a tech. It's a tech-driven market. Mag 7s are the most important stocks. So these stocks has to roll over for index to take a dive, and the index rolls over is going to take S&P with it. That's how you make the bear case. You need to find weakness in Mag 7 stocks, which are the ones that are struggling. Like, you know, so we can go back here and look that how they're doing on a monthly basis. Tesla monthly swing is down, weekly is up, daily is up. Tesla, Nvidia monthly is down, weekly is up, daily is down, and they're gonna report earnings in a couple days. Focus here because you're looking at something bigger picture, right? Apple down, sorry, up. Daily is down for sure. Netflix is up across the board. Microsoft down. Oh, it triggered. Wow. And Microsoft triggered a go signal here on a weekly time frame. That's crazy. Meta up, up, down. Yeah, you don't want to get confused over different time because they're all different time frames. You always got to take Google down. See, this is why I wanna let me show you the why I took Google and why I wanna Google printed a higher bar for the month, right? Because Google was down for 3 months. So the swing turned down. Of course, remember we're looking for 3 bars. So the swing turned down on the Google. Google printed up a higher bar. So the Google printed up a higher bar, and I was like, okay, so like the one standard deviation move is 175.79. And I set up a target on it at 175.50. I was like, okay, well, we're approaching near the month, like, like next week is going to be, the month is going to be over. I was like, it's got a complete minimum of one standard deviation move. That's why Google just popped hard this week and hit a 176.77 and it got backed off. It's like, okay, good, we're out. That was the trade that I played. So I'm looking at here, then from here I move to this chart, from this chart I go here, and then from here I move here. That's how I structured a trade based on 4 different time frames. I look to see what the swing is here. Then I look at this swing, then I look at this, and then I'm gonna hunt for trades here in a 1 hour time frame. This is for swing trading, which are basically based on different. I don't really need a monthly, to be honest. So it's a very long time, but just to get an the idea about just to see like what would be the 1 or 2 standard deviation move that if the stock do happen to get in 1 month. 1 month is most of the time is always one. You see like this the low right there, this band right there, it's a 1 standard deviation move. This would be two, would be 197, but we're just almost done for the month. So we got a Amazon down. This is down as well. Man, this sell signal right there, this is something. I put it to a test. I'm gonna use it. I mean, I just don't want to fire trades right, instantly. As soon as I see one, I just want to jump on them. But this is something that I wrote a script and I put it up on all the charts. Like any charts that I pull here, it will show exactly what where the sell signal triggers. The next bar, I mean, nobody can predict this. What you're looking for is next bar to be a lower bar after this. So now if we go back here and look them one by one, triggered here, lower bar. Triggered here on the outside bar, happened to be an inside, and then the next day came out to be a lower bar. Apple got hit here before we got in, lower bar. Netflix didn't get anything yet. Microsoft, yesterday, the other day, got sell signal here. Yesterday, lower bar. Meta, nothing. Google, nothing. Was back here, you can see. The point for this cell signal is on a daily bar is that it triggers on that bar on that day. Then the next day, we should expect a lower bar, meaning the red bar. So we're gonna start attacking this, but I don't I can write something, then I can put it up on a chart, but I don't just like literally start jumping on them because if I have something good, I can take I can make a really good use out of it. I will have it forever. So I don't really rush into because the thing is this that And this software is, let's say you come up with something, right? You put a script on it, you put variables, you put a conditions on them. So when all those conditions gets met, it you creates a certain signal, right? But then that signal has to go up into a test. You can't just say like, oh, I write something, this is what I'm looking for, and now it shows me as a show bar, and now I'm just gonna start launching trades left and right. That's not the point. But you need to watch and see that how, why, when it triggers, how does it work? You know, when all conditions gets met, is this when the signal triggers. When it triggers, then you have to look at the response after that. So that gives you those results that you're looking for. That's when it's like, okay, you know what? Yes, it looks like it's working. Now I can see if I'm gonna get a next one. I'm gonna put my money on it and see if I'm gonna play the downside. So we can do that. So it's coming. So it's just give me few more days. We're gonna start throwing puts to the downside. As soon as I'm gonna get, because now I can literally scan one. So I can go back here. So if I want to run a scan here on S&P, all 500 stocks on a daily basis here. Let's see how many shows. There you go. So on Friday, as of yesterday, okay, the same signal right there got triggered on these stocks. So let's take a look. So this bar, but it doesn't. Now the question is that the next bar after this has to be lower here. So it triggered on this one. CrowdStrike, that's a double one. See, the last one triggered here on that day. The next bar was a lower bar. Oh, I don't even know about this one. That's gonna be a tough one because we're looking at 455 down to 436 on Monday. It might go into an inside and then go outside the lower bar. But the low right there must hold. That's the point. No, so anything, I mean, anything can happen, but the support is here at this high. So if we go back here and change color, see, outside bar here, that's when it triggered, and then we have a lower bar. But the close was here. So nobody knows where the close is gonna be. It's just the point of uh of us see if the thing can some of them works like crazy. Look, this one, this one triggered one. So you can always go back here and look. That was the last one. How long it took for this thing to trigger. I put a pretty hard conditions on them. It doesn't instantly give you. I tried on 1 hour. I mean, you can play it, but not seeing very good results. But definitely daily is catching my eyes really good. You see like all of these cell signals right there. Every time you see the red arrow right on the high of the swing, then you just have to look down to see what happens on from that, because this is the hourly bar and it triggered. And then when it's triggered, you want to make sure that high of that bar holds, okay, for this thing to work. You see right here. So then from you see that even the fact that price does manage but didn't really break above this high right there. So then it just, you can always see results on a smaller time frame. That's why I just watch bunch of charts just to kind of just to see like how this thing is working. You see right here, triggered here down for 1 hour, and then it just rip right back up. So this you get pretty like a false, like I wouldn't say a false signal, but they're gonna move like really, really fast. Like here you see on a very tiny bar. Yeah, we got a lower bar. You got so for 2 hours, yeah, you got this bit of a downside. And then it just for the next couple hours goes right back up. So shorter the time frame is, more signals you're gonna see. So you gotta try to filter them as much as possible to cut the noise. So you go here. Oh, it's got double. What company is this? Hubble. Last one triggered here. So you always look at the last one when it was triggered. What happened after that? You know? This one, this one. See, nothing here. Even the fact that the price was coming down all this time, but there's nothing there. But see on this part right there, so let's say you see something here, you see it has an inside bar right there. That's still considered as a one bar. But the point is you don't want to break this high. So if you do manage to take a trade, you just put a hard stop loss right there at the high of that bar. And then you see like, okay, if you can take out the low of this same bar where the signal triggers, that's the trade that you're going to be after on puts. So you see right there, the day of December 6th, it triggered. Next day, lower bar. But you don't, well, nobody knows, I don't know, and neither do you, that we're going to have this kind of a massive plunge to the downside. But I can always run the downside projections. I have my fibs, that's not a problem. But the ideal uh, downside target is always your previous swing low. That's where you hit a jackpot. Okay. What I mean by that is you have this downswing, signal triggers here. You jump on the entry the next day, set a stop loss right there, and set alert right there. That's your target. You wanna you wanna take out the previous swing low. This swing. That's where you're gonna make your money. That's what you call a perfect signal. High didn't get taken out. You attack the previous swing. But the point is the price can stop anywhere, and then it can just go right back up the next following day. But you still, as long as you can get a lower bar, that's what the signal is for. Sell is supposed to go down, not up. See, like here to this low. So see here, higher bar, right? Inside, another inside. Finally, the third day, it took out the low of the same bar right here. But the point is that the high right there must hold for this thing to play out. I think it's pretty good, right? Don't you think so? How much do you think the trades we're gonna launch? A lot. Those coming, so just wait. I don't rush into trades after trades. So like I wanna get this, I wanna get this. Look, I'll make money. It's not a, but something that I will I need to put it to test, and to see what the results are. I mean, we don't need 50 trades. We just need two, three trades, a good one with the right size. Boom, we're done for the month. You know. So it's so I will so every day from what is my every day I can run scans and there's always selective stocks that shows up, but I can run a full scan on this is all 500 stocks. So this is another one, which is Mondelez International. That's a small. We need to find something that stock that actually moves a good like alpha stock. So now in this case, right there, what are we looking for? What we are looking for is that signal triggered here yesterday, okay, on this one. And now what we need to do is we need to look for, I'm going to put a hard stop loss here, okay, because we don't need another higher bar. And we need to target the low of this bar and the low of this swing. So this is going to be two targets to the downside against this stop. Okay. So, well, this is now on Monday. I'm gonna run this thing. I'm gonna put it to test on Tuesday. Okay. So you don't have to size something crazy. So if I'll test it out with one or two contract, which depends which stock pops on Monday, and we'll see how it works. It will be a next day trade or 2 days trade, most likely. So I'll buy like what 2 weeks of time, you know, or we can just set up a spread, or you just buy simply whatever, add the money, 50 delta, 50 delta puts, add the money. And we're going to use a hard stop right there at the high of the bar, and we'll just wait for the low. That's it. That's the trade. No noise, nothing, just you hit, like we'll just have to wait and see how this thing plays out. I mean, we just went through many of these stocks here that these are big names, as we all know. The best results always gonna be out of the big names, you know? So we have Tesla. So I mean here, the last time Tesla got, I know, a little messy here. It's not here, and then here, and then here, and then here, two down. But the point is, don't expect or have your expectations too damn high. Like, oh, I'm gonna get this sell and I'm gonna ride a 30% plunge to the downside. Yeah, you don't want to be that greedy. This is days and weeks, days of selling. But the point is this, that when the signal triggers, the high of that bar must hold for this thing to play out. Okay? This is not some indicator signal like this one, or the shitty one right there. Look at this one. That's the no go, no go. But look at mine. Failed that one. I was even watching this one as a comparison side by side to see, like, okay, he has his based on indicators. Mines are set on hard conditions. So let's see how they go. Here, I have nothing triggers here. You can see. See, it doesn't go as often. Even the fact that you see like how much downside is here, 26%, 15%, but no, it has to it has to click. Okay, NVIDIA here. The point is for you to look for the next day, meaning a next day or two. Here. NVIDIA most likely will sell on earnings if the high of the bar signal holds. It might just crush both sides, but Nvidia just Apple got hit here. Yeah, Apple needs to push a little bit here, man. We need to see what we can do here. That's the standard deviation move here. So Apple has a pretty good support here. This is what we're gonna watch. Right here. Previous swing low is 193.25. And then you have this is actually a third standard deviation move at 192. So I'm watching this. I don't have to draw anything. I can just read the print. This. Definitely, Apple should definitely find support here to move for a day or two to the upside. It's just kind of a little range bound. Plus, this go no go signal fails as well. See right there? Mine triggered up there on the top. Boom. That's a good one. I think we're gonna do well. We're gonna find good trades. Nothing on Netflix is pretty good. Last time Netflix had up here and here and here. But if you notice that how well this thing works, you can see the results, right? So if this thing triggers, if the next day happened to be an inside day, the second day is gonna roll over. I'm not seeing any, I mean, here and there I didn't notice. I'm not actually came across and saw like the same signal triggered here, the next day went inside and then went right back to the up, back to the upside. It's a good results. I mean, this one is Microsoft right there, which was on Thursday, and then yesterday we had a lower bar. Nothing on Meta. Meta had this going on go pretty very very choppy here. Very very choppy. Google, it's good. Last time was here. Amazon, right there. See, lower, inside, lower, a higher bar, a lower bar. Then the last time was here. Yeah, you're always going to go back and take a look. AMD, right there. QCOM, yeah, QCOM, Broadcom. I built good stuff. We can make some really good trades in the coming weeks, and we're going to have it forever. If we're going to be, let's say, um, in a position um, and happen to get a signal like this on a daily bar, you can either simply book your profits or you can simply cut the trade. That's just you can do it that way as well. Because you have to look at this when, let's say you are in a certain stock and you hold in it and you're you're profitable and you're going up, and because the the price is rallying this and that, and then all of a sudden you get this. And if I run a scan, if one of your holding stock pops up, well, you know what to do, you know? So you either downsize the risk and or just try to book some profits and just make some changes, There's some downside is going to be in play from there. So it's another really good sign that we can all can use the ASML. The last one was here. She only did for 2 days and it ripped right back up. Yeah, I'm not like don't I don't look at trades like these months like days and days. I mean, it can come into a play. So let's say like you can do it two ways. Let's say that it triggers here. Next day you take a put entry, right? You take two puts. So when you take two puts, you can close one on the next day on the lower bar, and you can just leave the one as is. You can do it that way as well. So meaning that you had two, you closed out one the next day on a lower bar, and you leave the one open as is. And then you say like, okay, let's see if the Wednesday is going to be a lower bar as well. So that way that the price can push lower, and then you have still have one on the board. You see, like here you have 2 days, and then if you want to really want to be greedy, you're just gonna rip right back up. Now you see, they went back above the high of this bar, 695. But the high was 6701. So the price can reverse. Yeah, there's no because every we all can see what we can see right here. We don't know nothing. We don't know what's gonna happen here. It's all blank. You see, it's all blank. This is where you based all your opinions and all your judgments or whatever you want to do that what can happen and will happen and this or yeah what well, nobody knows that. Or we're gonna go here and then we're gonna back off and then we're gonna go back up and we're gonna stay here and then we're gonna come back. Yeah, there's some genius out there who make these kind of cases all day long that we're gonna stay here for a month and we're gonna go back up and then we're gonna come hard down. Like wow. SMCI right there, nothing. MU, got one here. TXN, nothing. You see, not all of them is gonna have it. There you go. Applied Material got one down here. This is on a daily time frame here. They can kind of see it. ARM got it here. App, nothing here. Uber, nothing. Palantir, nothing. Salesforce. See, even the fact that you see the price is coming down, but it's not giving you that thing up on the top. Well, it has to. There you go. ZS. It's pretty. There's a couple of you even send me a direct message to see what to do. I mean, I told some of you to take some off. We had a pretty wild run on this stock. There is upside. This is a swing one that where the stock is right now, and the stock will eventually back off and into the second swing, and then we'll look for a third swing. That's the go no go signal here. I mean, yeah, signal sometimes works really good as well. So I'm not gonna badmouth it all the time. You see right there, and then it's ever since had a pretty strong. That's a pretty good one. So see now this one, but see the downside here is very choppy because it's very it's just stock has such a monster move. Look, the sell signal triggered here. Next day was the inside day. That was the outside day. It did manage to put a new low, right? But it made a new high as well. So made an outside bar, then another outside bar, and then another higher bar. You see, it can cool off a little bit. So how much it can cool off, we can just take a look at them. Okay, one standard deviation move, 245. Two standard deviation move, 238. Three standard deviation move is 231. So this is gonna be the downside in case something triggers off from there. But the point now is the close was at 254. Now the next bar that we should be looking for is this to be open is to take out 248 low of the day of Friday. If this works, there's no everything's to be guaranteed. Um, very strong run. Doggy, um, Datadog, Paycom. See, very choppy as well. It's very, if you notice one thing that a stock that is on a huge swing to the upside managed to give back very little because the momentum is very strong, because you have to look at this way that the price is still trailing well above the 8 and 20 EMA as well, 8 and 21, you know? So it's always a hard case to make to actually take a little aggressive because you stock has gained so much upside. It doesn't mean that it's just gonna go up, something's gonna trigger, it's gonna flush it all back down. You know? See, it just cools off for 2 days, rips right back up for 3 days, you know? And then you have another out. It's just like if you start looking at, but you have to pay attention that what the price is actually doing and where the signal comes. Most of the signals in these conditions fails. Keep that thing in mind because price is too range bound. See how many days over a week and a half what the price is doing here, just literally sideways. It's just, remember we talked about accumulation, distribution. Distribution prices go sideways for days and weeks. That's when the ATR is starting to drop, when the price goes in a distribution phase. Oracle, nothing. Service now got one here. There's a higher flyer right there. That's one expensive stock. See? MSTR, nothing. The MSTR is coming down here toward this second swing now. So keep that thing in mind. Gotta weave up 356. This band right there, 350. This stock should find support right there and weave up, and the three standard deviation move. Pivot high is here to this previous swing, so there's a pretty good support coming here for MSTR. This 343, three standard deviation move along with the weave up. So this is a zone you gotta watch. Keep an eye on this. Will find support here for sure. So I'm not selling nothing. It's fine. I don't get worried about this. It's gonna go up much more higher. Coin, nothing. Shopify, yes. I got this one here and his Costco, nothing. Watching this one. Lulu, got one here. So it's just like, a bunch of stocks can you can look like MCD, Big Mac, nothing. Last time was here. So we'll see. We're gonna swing some trades. We can leave again, keep in mind that the best exit and for the signal to plays out in a really like the I'm talking about the reward is always the previous swing high. That's where I think if we define risk versus reward on a trade setup, that could take a 1 day, it could take 2 days or 3 days. Okay. That as long as signal fires here, we take an entry and we're simply just gonna set up a stop right there. We just look as soon as the price breaks above the high of that bar, just cut the trade out. and then we just look for a reward to hit it here for this swing low. Now that swing low can take a day that didn't take, or the next day or the third day. Doesn't matter. But you can define your risk by putting up like, okay, whatever it is, just set up a price alert right there. If the price does manage to go up here, I'll just simply just gonna take the trade off and you just wait for a day or two or three for this to swing. That's the trade, what you call excellent risk to reward. I'm doing few of them just to because I'm testing this thing out by doing one contract to see how this thing is working. It's been good so far. So now we're gonna start launching trades and Goldman Sachs. But the thing is this, now you see like the high here, the previous swing low is here. That's a big move. It's a big, huge move. I mean, if you are patient enough, fine, yes, it can play out or it might not. But as long as you can catch, let's say this move, I mean, that's a still decent payout, But you see, you have a support here anyways on this swing low. So swing high, sorry. That's your pivot right there. Yeah, you can structure a beautiful trade and have, but sometimes you have to be a little bit more reasonable. You don't want to have a very high expectations. If you have high expectations, those are the people fails way often in this business because the expectations are very high. They think like, oh, I want to trade, I'm going to make money 12 straight months a year. That doesn't happen. You are in a wrong place if you think like, oh, I'm just gonna follow this guy because he has a magic wand or sitting with a crystal ball that he's gonna print 12 straight months. Well, that doesn't happen. There's no brokerage firm or any investment firm out there is paying their investors 12 straight months a year. Let me know if you find one. You know, yeah, you're gonna, you just trading is just same thing. I mean, firms, they're not, they do pay returns to people and but this is also all based on the market, overall. I don't know what kind of returns they're paying now, and S&P is only sitting flat for the year. People who have their 401ks and college saving funds that took a dive and now they're just right back where it was. They don't really didn't move much. You just got to flush out and you just back to square one. Nothing here on this one. Yes, I'm just, I just wanna. This is something. I'm always doing something. um, What is sector? Sector wise here, if you look at the weekly RRG, look where technology is, consumer discretionary. These are the two stock, the sectors that I am gonna, that is the one to play and to find weakness in these names. That's it. In the coming weeks and months. Because everything else, look where is it? Is starting to point. How can we make a case of a double digit? Okay, looking at this. This is why I'm talking about. This is just things are just not lining up for me to make a double digit return for S&P 500. I just don't see it. We went over all the swings on a quarterly basis and stuff. They're all down, five of them out of 11 sectors. And look on the weekly basis where they're all heading next. It's only two sectors are rotating out, but nine of them out of 11 are starting to rotate out. Sorry, the other ones that are rotating in, these are the ones that are rotating out. Look where they're heading. So the only sectors right there that we see is industrial, which is good. And now we have technology right there that's heading northeast. And we have XLY. But look at this, you see, like, look where all the rest of the market is compared to these two. So so we're talking two sectors. One is this, okay? So these are the companies that you are um, um, looking to see where we can find trades. So under consumer discretionary, the sector, how many swings are up right now? One, two, three, four, five, six, seven, eight. Eight swings. Eight stocks are up in the upswing. Every other stock right now is in a downswing. Okay. Tesla is up on the top right there. Amazon is right here. It's down. So their performance wise, we year to date, you can see it here 3, 8%, 9%, 18 to 10.7. You know, Chipotle is right there, is down. Like Chipotle just, I don't know how the stock moves. I mean, the stock trades like in a 2 point range. There's a 50 here, 52 here. I mean, I don't know. I mean, I like this one. I hope this because this has the same thing that it has a higher monthly bar. So I'm really hoping that thing can pop next week. If it's not, then it's a 2 point play. Its ATR is so damn low on this stock. It just doesn't really has a massive alpha, you know. So just gonna give some time and see if it's been down for 3, 4 days. So um, there's like a bunch of names that I'm watching here. So we'll see if we can. There's nothing here in a swing two either. You see, they're all negative. 1, 2, 1, 2 to the downside. Negative. We need positive two. So the only two is right here, Wind Resort. It's a 1, 2 swing right there. One here and two here. So there's a potential here that we're gonna watch to see we can squeeze a trade here on this one. But if you look at the weekly time frame, it's been up for like six weeks in a row. One, two, three, four, five, six. Oh, it's five. Right there, five. I remember this time signal that I did five. Next bar is most. There's a pretty good chance it's going to be a lower bar. So we're gonna cool off a little bit. So we're gonna hunt and look for opportunities in the coming weeks, or yeah, in weeks, is this sector and obviously infotech, because there's no other um on this side. Yeah, same thing. Look how many swings are down. It's infotech. So do we have anything here in the 1-2? Is one here, AKAM. This is a 1-2 swing here. And one here. I don't even know this company even exists. Motorola. It's a $4 stock. Crazy. And this one, MPWR. This stock doesn't have any liquidity. It's just a very tough one to play with options. Very low liquidity stock. And this FICO, oh boy, check out this flush out. Oh, good. Don't worry about that one. And AMD now. Yeah, AMD shaping up for a third swing up. Keep that thing in mind. You see, it's a swing one now. You take out the swing high, one. Now this is two. Then you got three, four, and five. Sequence goes up. Yeah, you wanna hold the previous swing low. Now the one that I'm betting and is this. No, the weekly down. This. It's a valid swing. I understand that for 2, 3 days the stupid trade went down. But this is a 1-2 swing on the bleach. So the support is here and the swing will turn down after this failed swing right there. So this 130 has to hold next week. And I took a trade because I see mean reversion signal as well. That didn't really work. This one was pretty good. Not this time. So that's what I was looking for. I was like, I have a 1-2 swing. I have a mean reversion. Stock is coming down. It should find support, should give us a bounce back toward this 138 this kind of a area, to the upside. Anything can happen. We have 2 months. It's a valid swing, but let's see how we close out the month. It's a pretty oversold RSI as well. Very oversold. So it needs some sort of you see go no go right there. That one failed. But this sell signal right there has been working really good against the whole thing. Right there. See. Just on a weekly time frame. I mean, this you're talking from January, yeah, for this whole month. So you're talking 6 months off from this uh from this high. I mean, the initial flush down was here, as you see right there. So we'll see what happens. It's right near that one, it bounced right there. So we'll see. We can just try to make a move back up here a little bit. So we'll watch. I was just, that's what I've been hunting for stocks here. This is the, but you see, like a lot of them, they're starting to move. They're pointing toward this side, you know? But this is where I like this one because this is a 1-2 swing and this is trying to form a hook to the upside as well. I really like this setup. It fits right, you know? So we'll see what happens. I might do a trade next week. This throw up this AK right there. It's down 20% year to date, but this thing triggered as well. It's just, we'll see. Let me watch the low here. See how it looks. Hang on, let me do a wave up. 77 off the highs. Oh boy. So we got the weave up here from the low, from the high of the, from this low swing, from this high swing right around here. Price is here, swing is up. Well, we need to see if, oh man, this thing is, oh boy. This is setting up a some nasty looking inverse head and shoulder pattern. Wow. There you go. This right shoulder right there needs to find support here. This is a good setup here. Looks good. Now what we can do, we have a high swing. Take pips from here to here. Okay, so we're right between 50 and 161.8 right now. Right there. I mean, the worst case that it could come down here, but you really don't want to come down too much if you trying to do your inverse head and shoulder pattern because your shoulders has to balance out basically, side by side like this one. You see? And you don't want to push one shoulder too deep. And then it's kind of crooked looking shoulder falling more on one side. It can it can come by the look I'm just talking about. I mean, it's not up to me to decide just by the look, but you need like a little balance. And then from here, you started to work your way back up like this. That would be yeah, let me watch this one on Monday. We can do a trade on this one because RG looks good right there. And it's just a matter of finding support. It's a pretty not that expensive stock either. I'll try to target something 75, make like a 75, 80 spread. I don't know how much of the stock. No, hang on. One standard deviation move is 78, 80, 83. Okay, yeah. So 75. Yeah, so 75, 75 and 80. Yeah, 5 point spread. And we can just get one. If we could get the 75 call, keep stays in the money over time. I mean, yeah, that'll be good. Let the 80 expire. Yeah, well, you can if we really rip to the upside, yeah, that'll be beautiful. And it goes both strike goes in the money if it plays out that way. That'd be perfect. Yeah, 75, 80 would be the play here on this one. And we just gotta wait it out and see if oh man, this FICO rate, I don't know what company is this. That took a massive hit. Yeah, it's the worst stock in infotech right now. This one is coming back now. MS, yeah, this is a Motorola right there. We just looked at them. See, a lot of time. Oh, the credit score. Oh, that's a joke. Credit score. Have you noticed that if you pay off a card or any sort of a loan, your score drops? It's like they make you. They will. It's. I mean, it can go back up again, but the point is like you pay off an account, your score is gonna drop, or you close out an account basically. The score drops. That's a scam. Seriously. Zebra is good. On a weekly time frame, trying to make a move back up. And last year, I had such a nice trade on this one. I went all the way back. That was a really good trade last year. Look how much it gave back. Almost everything. It's crazy, man. This is you went from 200 to 400 and you back to 200. That's crazy. If you really look at the price here, you know, and now you're back to 300. You're right in the middle. Wow. And this company is here is out of Illinois. They're up in north. They're right at 300 now. Well, I don't think it's gonna. I don't know. We're gonna watch. Yeah, all the companies are here. So, but the thing is this: you see, like a lot of these swings are down now. So this is why they see the overall market because the overall market is down for 4 days as well. Tesla managed to um, stay up yesterday. The ins no, oh, okay, that's on the communication here. Tesla managed to survive inside day yesterday because it already has 2 bars down. So one more down is gonna be swing is gonna turn down. So Tesla must hold 333.28 on Monday. Oh, what are we gonna do? We can. These are the ones that are actually has the potential. These are the ones that are stocks that are in a lagging quadrant now heading northeast. There's 32 of them. There you go. These are all the stocks. They're ready to make a move up. So the list of stocks is right here. Bleach, Chipotle, no, Ecolab, Expedia, KDP, the Dr. Pepper. We had a pretty good trade on that one last time. Lindy, that's a huge company. Massive. McDonald's, MDLZ, Merck, Match, O'Reilly, this, T-Mobile. Hmm, That's it. So I'm in this, I'm in this. So if you notice that it's a 1-2 swing with the mean reversion along with the rotation. Let's see if we hold the swing in two to see if we can manage to move, starting to move back up. If not, then it's due for got 2 months. So we'll see what happens. That's how I structured a trade. I mm, run scans like this first and to see which stocks are sitting here. Then I'm gonna pull up those stocks. Then I'm gonna try to find 1-2 swing on those stocks and see how that look. That's the bet that I'm willing to make. I have momentum. I am looking for alpha, which I have plenty of it from the center point. And as long as the swing is valid, then I have mean reversion. That's it. I mean, what else do I need? I have like 4 or 5 different confirmation for trade odds, basically, let's call it, on the pair to move. So if it goes my way, fine. If it doesn't, well, I'm gonna move on. Find another one. But this is a scan of 500 stocks. I mean, the rest of them are all up here, there, but that's not the. But we're looking for lagging quadrant stocks. They're here, which they're not gonna go back this way. Are heading toward the improving quadrant in the coming days and weeks. So it's just like, the same rotation we just did on Google. You see, that's just going to be the same concept here. So by just like chasing swings left and right, fine. But we got to find alpha and we need to find momentum as well. So the bleach is here and Chipotle is here. Now Chipotle right there it's okay, but it's only like it's a low ATR play, you know? So it doesn't move as much as how it used to. But there are a few names that definitely has the potential that could make a move to the upside. There's Pfizer here, but I'm just um, not really too crazy about healthcare. I mean, I'm trying to swing a small on Eli Lilly. That's about it because if I wanna play healthcare, I'll take the strongest leader. The rest, the healthcare is quarterly swing is down. Like the whole thing is just like look like a mess. You can capture some of an upside, but just there's nothing like the actual trending to the upside that you can actually, you just you just basically try to play a bounce. Let's call it that way. So Good stuff, huh? The best scanner in the world. So you gonna do anything in Go yesterday? Huh, you named five stocks triggered a go no go signal. There's a stocks. How many stocks in NASDAQ 100 cross above 8 and 21 EMA? You can condition that. There you go. So there are 82 stocks are trading above 8 and 21 EMA right now. All of these stocks. So you can just condition it that way as well, just to kind of see like which stocks are trending up. I mean, if the stock's going to be down, we can look for the one that crosses down. So you can check the overall market that way as well, like how many actual stocks are trending, or the big companies are trending higher or they're trending lower. So you can just do it that way as well. You already did this one. Yeah, that's all. What else you want to look at? Yeah, we're not staying there for too long. That's not if you want to look at
Can
a
you
stock.
can you do hymns?
Huh?
Hymns.
Oh, hymns. Let's make a chart here of hymns. Okay. Don't worry about this. We don't need this. Let's do this. Made it a pretty U shape. Okay, so it has a potential that it could form some sort of a handle if it has a U shape. Um, what else we can do? We can do weave up off from here, one off that low. Okay. And we can draw our fibs from here to here. So we have 78.6. Get rid of everything else. So we have 78.6 sitting here at 62.49. High was 65.89. Weave up is here. Now we're going to leave that one as is. Now we're going to run this swing high to this swing low. So we're going to get rid of this one to this. So this is going to be one downside zone along with the VWAP support along with fibs. So you have one this. That one is going to be very close. You need to really run it. You see, it's going to be super close. So this is fine. So what do we have? So now what you're going to do is you're going to build an upside zone like this. This is where you have the high with you have the high right there, which is 65.89 with the 78.6. So this is your high. And now this one is going to be here is going to be your support right there. Okay. Should be other way around. So it doesn't matter. So this is your support right here. This is your VWAP. And this is the resistance. If this zone right there, meaning, oh, the swing is up or down? Okay, it's down right now. Yeah, you have a 22% downside. Of course, it's gonna be down. So the swing is down, right? So if the price, this was an inside day yesterday. If the price doesn't manage to back off, comes back toward this weave up, toward this 38.2 and 50% retracement. So this is your downside zone that you watch against this. If the price does manage to make a push back here, try to break you seven, you always know 78.6 is just not gonna instant. It can, you see, gives you a pretty big hope. A lot of people they call like a the smart money move, or whatever they call it, smart zone or something. A lot of stops triggers here at 78.6 area. Okay. And a lot of people exit their positions every time when the price reaches 78.6, like institutionals, and they book profits or they're gonna either close out positions. Because if this breaks, then the next is this 72.98 print. And then we can project more upside. Then for now, there's no point to project anything unless you break this, meaning to break this and this. And then when the swing's starting to go up, reaches this point right there, then you can project the upside. Okay. So you can do that one. So that's hymns. What else? And save.
Food?
I gotta clean because I don't have this thing saved. What is a hood?
Yes.
The hood is right all the way up here with the double top. Okay, now it needs to break. So, yeah, okay, don't worry about anything else. You just focus on these swings, are pretty long, huge swings. Okay, what do we have here? Let's take a look. Mark the high. Okay. The swing is down because this was an outside bar. We got three down here. Okay. Okay, the sell signal on mine triggered here, here, and here. Nothing triggered here, which is a good thing. And you can do weave up from here. Is okay for now. Then we can run one from here. So you can do, that's gonna be, I don't think it's gonna move that. I don't know how much is the stock moves. This is good for now. So what you're gonna do now is draw your line from here to here. So get rid of everything else. And you just look for this. You don't need this. You don't need to come down this deep anyways because price is still way up. You need to run that deep retracements. Right there, this is good enough. So you watch 6185, it's a 23.6, and 5874, 38.2, along with the weave up. So you just focus on this swing, this high to this low. That's it. We need to go this and this. Then it's gonna give you way much room to the because this is a daily bar. I mean, I can tell by looking at the bar like how much is this actual stock moves. Not much. It this is the initial. That's a big move. The rest is just the one and a half 1.1 point stock right there. 48.38 down to 45.93. 2 points. Not much. So that's hymns. Oh, sorry, the hood. So watch this against the double top. So If the price breaks above this double top right there, break means that you need to see a body of a candle open and close above the print, not just to go up, oh, this is a breakout, that's it. No, you need to wait for that whole candle to close. And then we will project more upside. There's no point for now until it breaks. Okay, so you need to see something like whatever bottom candle you want to take. It has to open above the 66.89 and close above the 66.89. And then we'll project upside. Okay, what else? Oh, you want to look at Broadcom? Broadcom, I have them here. Where's Broadcom? Right here. Broadcom is here. Broadcom is in a second swing. Got a sell signal. Okay. Last one we got him here. Had a pretty good run to the upside. Swing is up. You only have two lower bars. Um, our downside, what we're looking for is we have basically a double top right up there. We have mark. I can only give you those if I don't know if you're watching, you can. We have a one standard deviation move at 224, 215, 207. Okay. So we can do that. So you can just mark 224, 215, 207. And then what we can do, we can take this swing low, which we had from here, run a weave up from here, 205. Okay, so the weave up sitting here. So we have a pretty good support sitting here if the price managed to come back here. But for now, the way the price is looking right now is literally looking sideways, as you can see. Um, it's like this now. See, this is like, so basically, huge move sideways. So it can make a move like this and then make a move back up. That's possible. Okay. It is. Looks like, you see how it, look at the week just been like, look at this price action and look at this price action. You cannot tell, can you tell the difference? The stock is just breathing, like taking a break. Something is rising. You can clearly see it on a chart. That's what I that's what I was trying to explain. The same thing in the beginning of the video is looking at the S&P is you down and you up. That's not a trend. There's no such trend works this way. You just taking a 20% plunge to the downside and just rip right back up to 20. That's just not a trend. This is what you call a trend. They're more directional. That's why you guys start using channels now. I even had this guy sending a post in that thing on the community chart about it's like use the channel, connect the highs and lows of your wave one, two, three, and four. I mean, you can like what does it look? If this is a wave one, this is a wave two, call it as a three, sort of a four, you can make that case like this. Okay, this is a rising trend. The price is trending to the upside. Now, if you have a price that is trading like this, Is that a trend? Somebody can explain me that. I mean, I don't want to be sound negative or being like this. Most people, especially traders like us, lose money trading this range bound market. Mark my word, you make money in this kind of a trend. Your profit, it doesn't matter how many trades you launch, okay? Your P&L is not going to be as good as compared to this. I will bet you anything on a piece of paper. Your P&L will not going to be much on the V shape versus a rising trend. It has the shape like you see you have a high here, higher low, higher high, higher low. See the swing is above this one, higher high. That's the bullish trend. That's where this is what you're looking to ride to the upside. We own it. We have Broadcom shares. Same thing to the downside. It has a look like this. Initial low of the swing from the high, lower low, lower high, lower low, lower high, lower low. You see? It's trending to the down. It's a more directional move. And here people sit and oh, of course it can happen, but it hasn't happened yet because we didn't even cross that line yet. So there's no point for you or me or anybody else even sit and wasting our time looking something here when price is making up their mind sitting here, which has a risk that it can go right like this. See, this is where the decision, that's what I've said this thing thousands of times. 8.6 is a last resort. This is where the decision get made before you're gonna see a new high. The new high can be a double top or new high can be a breakout. Either or. Because every time when you reach the high of taking that kind of a huge dip to the downside, it's gonna have a massive stop. It's gonna get triggered there at the highs. Yeah, it's a little mixed picture. I mean, I want to buy the week. This is what I said is like this is a dip buying year that will reward you if you will stay patient for the next year or two. That's how I see it. This is the run that we had, which is running out of like we just we just range bound. That's all. And this kind of a range bound trading, especially with option, it's the nightmare because option traders are looking more directional move to get paid. A back and forth price action, not gonna help much. Because the thing is this that everybody's looking like, oh, we're just ripping this and which is fine. But this is only a 1 week, I mean, this is only again, the time makes a big difference as well. If you start looking at things on a 1 hour time frame versus an hourly or 15 minutes, I can take you to this 5 minutes. You're gonna see like, whoa, what's going on here? It's just how fast the swing change directions. But I mean, Looks like to me that dips are getting bought. So we'll see what happens. Now I mean, again, this is the sixth swing that has a potential to move up in a seventh swing, but we need to break above this first, 58.78. So now the thing is this that when you when you look in downside, clean this up. Okay, so now you look into the downside, right? This is your swing low. This is the swing high. This is the 50% retracement of this swing high and this swing high, this swing low. Okay. Now, every time when the swings are going to turn direction, it's going to put up a new low, and then it's going to give you that lower high, meaning the retracement from this high from this to this low. So you can see now you run from this low to this high. Where did we go? 50%. Oh, slightly above 50. And then we backed off and we took out this low of this previous swing low. Okay. Now we came back down here. So you can take, so found resistance, price backed off, the huge candle here. And now how do you find where the price will stop? You can run extensions. Now you take the swing high to this swing low, project it from this, gives you 58.50 to the penny for that day. And the next bar opens here, and then it comes down here. So now your downside retracement levels are 58.69, 58.50, and 58.26 for the day. That's it. 6.5 hours, you're just going to end the session here somewhere. So that's done for the day. So those are gone. So when the swing turns down here, now what happens here? You see, so you have a low here, lower high. So the swing is still going down. It will remain stays down until you have three higher bars. That's when the swing will turn direction. The swing was down. 1, 2, 3. Swing turns up. You just count manually. It's not rocket science. You just have to pay attention. Okay. 1, 2, 3. Swing turns up. Now, this is your low. This is your high. No, if you're bullish, you need to take out this. If you're bearish, you want to take out this low. There's no labeling. There's no other nonsense. This chart will filter every noise out of the equation. It's basically you're looking at there's you have nothing to worry like is it an A, is it a B, is it a C, is it W, X, Y, triangle, leading diagonal? I care less about all those. You know what the wave count is shaping up. That's just I'll worry about that later. So I have this. So we have we have another swing low here. So this swing low, you don't know the low is in until you have three higher bars. 1, 2, 3. Low is going to get recorded. Now the swing turn up. Now it stays up, outside bar, another outside, higher bar, outside bar. That doesn't change it because it still stays above the low. And we don't have three lower lows. Sorry, three lower bars. To visualize this thing in colors, they'll tell you exactly when and where the swing turn direction. There you go. 1, 2, 3. Turns green. Stays green. It doesn't matter. You can have a down bar, but that doesn't change the direction of the swing because you need three. Outside bar, higher bar, higher bar. Ended the day here, which was on Thursday. Here comes his tweet. Friday morning. Swing turns down. Why? Because it break below the 28, 58, 25. Now I put a new low. That low is not in for the next 3 hours. So you could have another down bar, another down bar. It doesn't. So it just those all those new lows is gonna be keep printing to the downside until the price stops and puts three higher bars. 1, 2, 3. Turns green now. It's not that. I mean, yeah, now the thing is this: you guys don't have Optima, which is fine. Okay, it's not a cheap software either. It's expensive software. But I do this thing every hour, so you don't really like if you either you just watch the chart because this is what I have it up on my screen all day. As soon as the market opens, because this is what I'm watching. So every time now, if the price, whatever it marks the low, and if we're going to say like, okay, well, where we have three bars that turns up from the low, where the swing turn direction, how much is going to go up? You can just simply run retracement. As soon as the three bar gets recorded, the chart turn the background turns green. You don't have to worry about this. All you have to do is to run from this low to the previous swing high to draw your fibs. So what the low was here, 1 bar, 2 bar, 3 bar, made it up to 58.68. Backed off, right back, retested, and then I flush it back down. So basically, it only managed to get up to 38.2% retracement until the swing turn direction again. Now I made another low. So what do we need now for this thing to turn back up again? Well, first of all, okay, we have a low in. So where do we have our resistance now? So how do we find resistance? First, we always look at the previous swing low. Every time when the price makes a new low, it's going to come right back up up to the upside. Broken support, which is a support, right? This is a swing low that we had before, is going to act as a resistance. So you just mark that one. First, this is my resistance. This is my resistance. You just mark the high and lows of the previous swing low and the lower high. So that's that part. So now here's 3 bars. Swing turns up. Now it has a potential that it can go up and face resistance right here, 58.25. The high was what? 58.29. Then it backed off again. Okay, because it backed off because it was up for 5 straight hours. 1, 2, 3, 4, 5. Okay, so it's the same day on Thursday, we are up 1, 2, 3, 4, 5. So all of these dips right there, what does that tell you? They're getting bought. Full swing, got bought out. Flush it down. Got bought out. Flush down. Bought out again. Because the thing is this, that you don't see a lot like, you can see like whatever the low is, how many green and the black inside bars that you're looking. This is a neutral bar. Like how many of them that you're getting? You're not seeing like two up and then the third back down. You're not seeing that one, right? So okay, what's the like? Okay, so what do we gonna? So what are we looking at now? So now we have this low, right? We have a resistance here, and we need to break this. Okay, now the swing is up because we only have one down bar. Okay, and now the direction of the swing is not gonna change until we get two more. So now if you bearish, okay, so you just, where do you find resistance? Forget about everything else now. You take this swing low to this swing high right there. So that's your, now you're looking for is these fibs. So now you have a 50% retracement here of this swing to this swing low, this resistance here, the previous swing low, 58.25. That's it. If this zone breaks, what will be my next upside? Go to 61.8. What will be my next one? 71.8. Once it reaches this, then you're going to watch this. So then from here, you can do simply is to take this, draw a channel or draw a trend line, connect this swing high, sorry, the lower high and this lower high, and draw this channel. If this thing breaks, you have a very good chance above breaking above 78.6 is going to take out the high of this swing. And then what we're looking for is for this swing to go up again like this, and then it's going to come back down for the downswing. So now we're going to run our fibs from here to here, and then we're going to look for our support here as long as this low holds. And then what we're looking for, higher high. We need a high. The high is going to get made once it's going to take out this high. It's going to be a new high. This is going to be a higher low, higher high. That's it. Is it complicated or it's just, yeah, if lower high and lower low, lower high, lower low. You can ask the chat GDP is going to explain you everything. I don't know if you guys use it. Just type on chat GDP 3 bar again swing. It will explain you so good. You will know exactly. This is how it works. I just did it for you. The swing turn direction based on a 3 bar, I can do a 2 bar or three. I like to use three. That's one. And second thing is this, that once you will have the swing down, what you're looking for is to take one of the previous swing high. And it will turn like this. Now this high right there can go all the way like this as well. But then we don't know that. But our high to the upside to target is this and this. So if you make a bet to the upside against this low, that you're looking for this print, you're looking for this print, and you're looking for this print. That's your upside bet. Upside bet against this low. If you if the price goes back like this, you kill the, I mean, that doesn't work. Now you're gonna have a new low. Sooner or later, And eventually, at some point, the swing will take out one of the previous swing high. That's what you're looking. That's what you are after. Because if you're bullish, this is what you want. That's your target. Once you clear that target, then you project the upside. Say like, okay, this is a high swing that I have. How much is the swing can move up? But in the end, everything is probability. There's no such thing that the price is going to come and exactly reach to the, hit the penny and it's going to back off. It doesn't work that way. You have your upside zones, you have a downside zone. I just built it for you. Just mark the highs and lows of each swings. This is why I don't sit and change the wave counts all day like everybody else. I don't have time for it. This is all scripted. This is all working. I don't do anything. Swing works on their own. Whichever it's keep recording those 3 bars. 3 bar goes up, swing is up. 3 bars down, swing is down. And then I just look for support and I look for resistance. That's it. What else? I want to throw a bunch of VWAPs and a couple signals and stuff. I can do that. That's just totally different. I mean, I have these buy signals here. I triggered this one here, didn't work out. This one was good. This one was good. This one was good. This one was good. So I used that one for a benefit as well to see like, okay, so this is the one that gives you the change of direction. This has, some, I set it up with the 3 bars. So sometime works, sometime it doesn't. This one right here. So if I take a trade on this bar to take out this low to this high, that's the bet that I'm going to make, but it didn't happen. See, it's a very short one. It backs away, and it just see it made a new low. The upside swing will change as soon as you're gonna break one of the previous swing high, which is a lower high. See how this thing turns green? And then it comes back down. See? That was a swing high. See where it found is it support? That's your support right there. Boom. I think, well, I mean, I've been doing this thing for years. I know probably for you guys it's all something new. But ask ChatGPT, seriously. Type like 3 bar swing. We'll explain you everything step by step how to, but it's that he's going to tell you the same thing what I've been telling right now. So this structure here, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, it's the same thing, right? So what I just said earlier is what? S&P needs to break this. Once it will break this will start to act, then it has to make a little bit more room to the upside. Starting to back off. This is going to become a support against this low. And then we're going to chase this print to the upside. These are very well-defined targets to the penny, if you ask me. Okay? If you sit in and thinking like, okay, I think the price will rebound and I'm looking to buy dips, you can simply make a spread, buy a call here and sell one here. That's your trade. Take exactly what the print is. 58.20 strike and 58.70. I mean, it's going to be a like, pricey one. You can do a diagonal. You can make a butterfly. You can just do whatever. You just pick exactly what the print is. You need to make like, oh, I want to pick a 58.40 or I want to do 58. No, it's right here. What do you think I do? you can make a beautiful spread here like this. So now what you're looking for is, okay, as long as this low holds, if I the price managed to break above this, which you don't know that, neither do I or anybody, that if the price does manage to break higher, okay, this strike is gonna this strike right there that you have is gonna go into the in the money anyways. So you're making money now. So you can close the trade if you want to, or if you don't want to close the trade, you can just ride this thing up until here. Because you want this entire trend to change to the upside eventually at some point. So one of those lower high swings, high will be get taken out. When? We don't know that. We can't sit and time the market. We know what the upside print is. What needs to break in order for market to move higher. Same thing here, you see. This high right there, new high. Higher low against this low. Higher high. 3 bar down, low, lower high. Price went back up again, took out this high, higher high. They keep going up. See, you're just not getting 3 down hourly bars. They're all green, as you can see, right? Blue, green, blue, green. That's a red. One doesn't count. So if you have one red, you need 2 more. So this one chop even. You see, outside bar, inside bar, outside bar, higher, lower, lower. So it just so came back down. So of course you have so many of them. They back down. Now this swing right there is you don't have to worry about any other swing. This is why I don't like to go this for deep. No, just focus on from here to here. You going up, okay? The direction of this trend is up. So what are we looking for? We're trading up. We're not looking down. You look down when the price is making lows. So these pullbacks that you're looking for all the time, you don't look for pullbacks on a daily when those daily swings are up. There's no pullbacks on those. Pullbacks happen when the swing turns down, when we actually have 3 daily lower bars. That's now the swing direction is see, direction is different. This right there tells you this is swing up or down. This is telling you the direction of the swing. So now the swing is up, people want pullback. The pullbacks on the upswing are very shallow. You see, they got a massive gap up, look, 0.6%, 3.3% move to the upside. You got you give back 0.6%, you rip right back up. 0.7 here. See, 0.8, 0.6, 0.7. And then when when you get something that starting to get bigger in percentage, you see it's 1.2 now against 0.7, 0.6, and 0.8. That doesn't, okay, fine. You got the initial move here, but then you got this. So now the thing is this. So that high gets recorded here, right? What was the swing low here? This 58.65. This is where now this happens in takes what, 2 days, 3 days, right? So that happens where this is 19 to count like 6 bars for the day. So that's 20th, 21. Yeah, 3 days until here. So as soon as this low right there, break right there, okay? And now the markets are going to push lower until it makes 3 higher bars. So your resistance is where? Here. Broken support acts as a resistance. And then you can always draw your fibs from here to here, not to here. There's no need to go that far. You have a resistance here for the previous swing, and you take this low to this high when you have, because this swing is going to stay down until you have three higher bars. That's it. That's how swing trading works. It's really good. Now, I want to throw some my signals and stuff. We can do that. See, some fail, some work, some don't. This is a 1 hour chart signal. See, one down, rip right back up. Choppy one. See, just the one down. See, that's what I like. This one, what I've noticed is smaller time frame is really because the swing changed direction too fast, So I've I put some heavy conditions on them, so it I see better results on a daily time frame compared to a smaller time frame. Okay, so you're just betting. So right now for Monday, what are we looking for? I mean, I have my large the this low, which is the fourth. Now this is not 3 bar swing. Now this is volatility swing. That's different. It has numbers on it. You can see the 3, 4, 5, 6. So volatility swings are different than the 3 bar swing and a 2 bar swing and the percentage swing. And then you have the dollar sign swing. So there's many different kind of swings, but you don't need to jump after one after another. You probably have to just learn one. So, and then go one after another. It's not just, that's just 3 bar is the best way to trade the market. It filters a lot of noise from the chart. You know where the high is and where the low is, and that's it. Same thing here. You see, down, down, down until this thing breaks. Down here until this breaks. Well, this was the high, sorry. That's the high. This is the higher high, higher low. See, down here, this is the high, higher low. Look at the support. Boom, higher high. Then you came back down here again because now you have 3 bars, so it turns back down. So from here to here, swing is down. Now what you're looking for? Now you need to break this high against this low. It did right here. Signal fired right there. Now you're making a room to the upside. So you just keep basically what it is that the direction, the swing is going to change direction as soon as it's going to record 3 bars in either direction. That's it. Now, if I go here to a 15-minute chart, look at that. Can you trade this? You'll, you'll blow up your account if you want to do this kind of a tight trading. That's your low, that's your high, that's your retracement. Now you're trying to break this high. I mean, this tight, you know? So now if you want to do a 2 bar, look at this. So now this one changes direction after every 2 bars instead of 3. It's the same concept. But when you look at it as on a bigger, the time frame, 3 is much better way to go compared to 2. But there are some people, I don't think people actually use swing trading, to be honest. They have a different way of counting swings, not how the actual way. This is the right way and the only way. how the Gann swing trading works. 60 minutes, 1 hour chart. It's perfect for me to look for a day. It's a whole day right there. 6 bars for the day, and it filters a lot of noise. Now you're gonna go back here to 15 minutes. Look at this. Oh my God. Oof. Huge gap down. The world is ending. You see how many now from here, if you're gonna do 3 bar, see, still gives you the same thing. It doesn't record, sorry, it doesn't have any 3 lower bars until here. There was 19 of them up to the upside until here. Then you have 1, 2, and 3. Boom, that's it. Swing turn direction. Now you get 3. Now those 3 bars that you look into the downside and to the upside now is based on a 15-minute time frame. Instead, 1 hour. Would you rather trade this, or would you rather go and jump on a 15-minute chart because you're desperate? Well, that's your decision. I prefer this. Price to me is all about support, resistance, support, resistance, nothing else. To me, they always says like for a chart is simple, the better. You don't want 10,000 indicators, lines, and this and that. Just it's not gonna take you anywhere. You know, keep it simple. You will see how clear the result, like the results and the easy for you to read the price. It's a one price. Yes, there's 1,000 different ways you can trade it. I get that. But just keep it simple. That's what I like to do. It saves you a lot of time, and you just see where else you can find the next trade that has a good probability using different tools. Apply all those tools to it and see how it goes. Well, not everything is going to go according to your plan, but you just have to see, you just keep digging. Trading is not like a 3 trade and that's it, I'm done. I mean, that's not you want to look at things. But this is the like right now. Okay, so where we find our upside and this and that. So let's do this. So now we're looking for is what? We have 3 here. So the only thing we can do right now is to draw fibs from here to here, like this, right? Because we don't have 3 to the downside for this line to goes right back down like this. So because it's still only 1. So we just look for our resistance right there. So can the price goes back up like this? Of course it can. So we have this, and but the point is we need to break this. Then the price will continue to the upside. Then we're gonna buy something here against this low. Then we're looking something like this, toward this, toward this. Then we'll project more upside. That's all. Is a noisy chart? You see a bunch of indicator, this and that. No. You just count 3 bars. Which way they're gonna open, you don't know that. Neither do I. Just make a bet. You make a bet on a direction. Swing is up, trade up. Swing is down, you trade down. I can do a lot of these, but at the same time, I don't like to overtrade. I try, you probably know a lot, like how I trade, and I tried, like, I trade very selective stocks, and I trade with, like, most of them are quality names. I don't jump on, it's not like I don't make money. I mean, well, I'm not worried about that, but I just don't, I'm not like these small caps and all. I mean, I can run scans on any group that you want. I have them all here. What, on 1,500 stocks? Look, I mean, Dow 30 is here, transport, NASDAQ 100, composite, shares, Russell 1000, 2000, 3000, microcap, midcap, top 50, top 200, S&P 100, S&P 400 midcap, S&P 500. And you got the communication, consumer staples, energy, financials, healthcare, industry, infotech, material, real estate, sector indices, utilities, small S&P 600 small cap, S&P 1500. You probably don't even know all this. You see how many stocks are here? I can run any scan and any sector, but that's not the point. I run scans on 500. Those are the best companies. That's it. And I track 50, which is this Russell Top 50. You see how huge Russell is? Look at the Russell 1000, 2000, 3000, micro cap, mid cap, top 50, 200. It's huge, Russell 2000. But they call it 2000 is because they have a 3000. You have, a lot of other companies in there. I track this, Russell 50. The Russell 50 has this. These are the top 50 stocks. It's a quality names. But now if you want to trade hymns and this, I mean, fine, you can do it. But, it's not like that stock is going to pay any different than these ones. Same thing. Trade is a trade. Different doesn't make which one you trade. If that stock pays you 10% of, if whatever hymns pays you 10%, what, it's a different payout? Same payout. But these has the quality names, better liquidity, much better bid and ask, faster fills, much faster exits. They're the one who drives the market. Volume is there. It just, these are the top 50 stocks that are news are going to be pretty much every day on these stocks. Good alpha, momentum always good, much bigger market cap. So the market cap is one. These are the ones that are one of those top ones overall on the overall sector, which has the most weight. So that's how and now if you, well, I want to trade those quantum stock and I want to trade those whatever nuclear powers. And yeah, I mean, you can do those. Those are newer companies. They have the potential. Everybody thinking that they're going to do good, this and this. Yeah, all the stuff right now is getting fully baked into that stock. But you really want to see the actual earnings. Are they really gonna put out the real test? That's what the earnings are for. Buying a future without looking at their financials is it's two different things. A chart can look really beautiful going to the upside, but if the company is losing money, what's even the point? The price will adjust right back to, you know, price to earnings sooner or later. So these stocks at least have a great balance sheet. Some of them are cash machines. So it just again, I mean, I'm not saying that you have to do what I do, this and that, but again, this is my style of trading. That's what I do. I'm not gonna change it for anyone. I know what worked for me. Okay, we gotta stop this AI. Stop AI companion. The feature will be stop meeting question. Ah, okay. The AI version. The AI version was all text format. I'm gonna stop this recording. Okay, we gotta go. I'm tired. I gotta go eat something and stop it.